Welcome back to another episode of the Bull in the Cup podcast. I'm your host, David.
And I'm the co-host, also David, David's dad. All right, welcome back, everybody. What a busy week it was. We've got a lot to talk about, so let's get right to it. We had a few big things in the news. The big, beautiful bill passed Congress, and then the jobs report came out. We want to talk briefly about each of them. Again, we don't get political here, but we want to analyze how these things impact the market. So this big, beautiful bill, that's what it's called. It certainly is 1,000 pages. It impacts industries differently. So you want to deep dive to see how it may impact a particular stock or industry you're interested in. For example, if the electric vehicle credit is going to end and the government's no longer going to pay $7,500 for the price of your electric car, well, then maybe less people are going to buy electric cars. So that could hurt the electric car industry as a whole. So that's an example of the things you want to look for. But as a whole, big beautiful bill cut taxes, right, Dave?
Yep.
And so what does that mean? Like when we see, there's a lot of controversy on the big beautiful bill, but as a whole it cuts taxes. So what does that mean when we see, taxes cut?
Well, when taxes are cut, it's a really good thing for the market, because when taxes are cut, people make more money, which means that people have more money to spend, which means the market would go up.
Right. That's exactly it. Right. In the short term. Now, there's a lot of long-term concerns people have with cuts to different programs and that society needs. But in terms of an immediate reaction, the market reacted positively to tax cuts because people have more money to spend. And so, and we saw, all the markets hit some all-time highs. So that's a short-term barometer and something to keep in mind anytime you see a tax cut on the horizon. Okay. So let's talk about, though, the jobs report came out. So what is a jobs report?
Well, the jobs report's basically how many people have added jobs, like how many more jobs were added. So like how many more people have a job, and the unemployment rate.
The unemployment rate? Okay, yeah. And what happened with the unemployment rate?
Well, the unemployment rate went down, which is always good, because it went from 4.3% of people unemployed to 4.1%. And the U.S. employers added 147,000 jobs in June.
Yeah, and so that makes sense. Just like you said earlier, more people working, more jobs added, and less people unemployed means people have more money to spend, right? People are making money, which is good. So generally good for the economy. I love talking about the jobs report. I won't go long on a tangent, but because it demonstrates the complexities of our economy. Because the jobs report is a good report. It came out good, and the market reacted good to it. But it's also in some ways bad that it's good, right? Which is kind of an odd thing to say, because we want people to have lots of jobs created. We want unemployment to be low, but we've also been living in a time of high inflation. And so as a result, the Federal Reserve has kept interest rates high, right? So it costs a lot of money for people to borrow money, because generally in times of inflation's caused, if you heard from season 1, when there's too much money in the economy. And therefore, there's so much money in the economy, things are going so well, companies can raise prices, and certain people can afford it, but then some people cannot. So that's concern when we have inflation. So the Federal Reserve raises interest rates, and they say, okay, it's going to cost companies more to take out loans, so they'll be less likely to take out loans to open new businesses or expand their businesses, or people will be less likely to buy a new home because the interest rates are high. So we're taking money out of the economy by keeping interest rates high. And as the market, we want interest rates to come back down. We want the Federal Reserve to lower those interest rates to spur more growth in the economy so that people take out more loans and it pushes more money in the economy. But the Federal Reserve won't lower those rates unless we see that the economy kind of cools a little bit. So the better the jobs report, the more concerned the Federal Reserve will be and say, well, things may be going too well. We won't quite lower those interest rates just yet. So it's kind of interesting to think about the complexities of our economy, that sometimes the jobs report, while good, can also mean the Federal Reserve keeps rates high, which isn't great for at least for now, but may be important to keep inflation low. So let's talk about our weekly stocks. Amazon and GameStop. What's going on, if anything, with GameStop, or is it a flat week?
GameStop hasn't had much change this week. It went up around like $1 partway through the week for no like real reason, and then went back down. So I don't know. It was like up like 10 cents or something overall. Not much. So not really much happened with GameStop this week. What about your Amazon?
So Amazon had another good week, up from 219 to 223 from our last call. So up a bit, and investors are really watching because this is Prime Day week. Prime Day is it's now expanded from 2 days in July to 4 days. It starts on Tuesday, and that's where Amazon has all these sales, and it draws a lot of people to Amazon to spend a lot of money, and so Amazon usually gets a big boost from its Prime Day event, so it expanded it from 2 days to 4 days. So I think there's a lot of excitement there. I think some recent B of A analysts were discussing how more and more people are beginning their back to school shopping earlier. And so I think there's just this expectation, and that's why you're seeing the bump in Amazon stock, an expectation that it's going to continue to do well. And then also it's got this Prime Day coming up, which is now twice as long, so it's going to be a big week for Amazon. So I think that's all positive news on the Amazon front. All right, back to our game. All right, it's been Marriott versus Tesla round 2. You want to do Tesla?
Basically Tesla hasn't had that much of a change, but it still changed a bit. It went from $309 to $311 last week.
Yeah.
And Robotaxi again might have been part of the reason it went up a bit, but still like isn't up too much. So I'm expecting more from Tesla soon.
Yeah, and then now they have some interesting news. Now they've got their earnings report coming out from Tesla later on this month, but because we passed June, we passed the halfway mark of the year. They had some interesting data. What was the data about that came out on Tesla about their year-over-year sales?
Tesla reported a year-over-year drop in Tesla sales, but it wasn't as much as expected, so the market reacted positively.
Isn't that fascinating?
Yeah, this is actually like something I'm going to be doing this week that might be interesting. I'll talk about that soon.
Yeah, I mean, I thought that was great, right? I mean, so it didn't do as bad as it was expected to do.
It still did bad.
Still did bad.
And so it went up. So
this is kind of like if you didn't study like as much as you should have for a test. You came out of the test feeling like you just did terribly. Oh my gosh, I just failed that test. And then you get a B minus, and maybe you're not thrilled. Somebody who's thrilled with a B minus, but you're really happy. You're really happy because you did better than you thought you did. And so that's kind of what happened there with Tesla this past week. It didn't do as bad as it expected on the year-over-year sales, and so so the stock went up a few dollars, and which is fascinating because the concern with Tesla going forward is that it was first to market really with the electric vehicles, and it had the lion's share of the market share. But now that other companies are catching up, even though Tesla's still the leader, other companies are now taking a portion of the market share. GM, Rivian, and stuff. But Tesla is leaning heavily into the robotaxi business, and so that's keeping its stock certainly in a possible buy now situation. You were going against Marriott again a second week in a row. Marriott was up again from 273 to 278 after having a huge bump last week that we talked about, where it expanded into El Salvador and had a big boost in projected revenue as it continues to expand globally. So Marriott's been up again. So I think I ended up winning with Marriott versus Tesla, but that was a fun 2-week game. Let's end with the stocks for this coming week's game. What do you got? We got a minute left.
Well, my stock is a bit different. I'll tell you why. I'm going with Delta Airlines Inc., which is basically, it's an airline, and they have their earnings report on the 10th. So they're coming up this week, and they were expected to do really bad this earnings report, like 16% lower than last time they had an earnings report, which was bad, obviously. But then, not much time ago, like an hour, not an hour, but like a day or two ago, oh, they came out with some news that might be better than expected. Still bad, but like 5% instead of 16% down.
It's the market is amazing. Don't we wish, like, I think kids would wish their parents worked this way, where it's the kind of like, hey, I did bad, but I didn't do as bad as I expected, so therefore, I should be getting some money for that. That seems to be how the market's working recently. All right, I was actually going to pick Delta, but you picked it first, so that's fine. We're going to have an earnings report battle this week. So I'll go with Levi Strauss. They make jeans. Some of the young people may be like, what is that? Levi Strauss makes jeans. Their earnings report comes out this week. So it's an earnings report battle. I'm a little nervous because with all the tariff news, I know a lot of commodity and basically things that are for sale are in question. But we'll see. It's the we'll do a battle of the earnings reports. Delta versus Levi. Earnings report comes out this week. Who has the better reaction? That's it for this week. Busy episode because of all the news going on. If you have a stock you want us to join in our stock picking game, send us a note. Otherwise, thanks for listening. Anything else, David?
No, I don't think so. See you next time. Bye.